Hello, welcome to Market Avenue. My name is Edward Nyako. Latest book launched by the World Bank indicates that the economic transformation of Africa largely hinges on greater and effective diversification of the products and produce made on the continent and sent out there to be able to, end foreign exchange is a way to improve the lot of Africa. And this book that was launched by the World Bank shows that Africa has what it takes to be able to add value to its raw materials and at the same time also take its rightful place in the global community. One of the co-editors of the book is Dr. Albert Zufak. He's in the studio to talk to us. And before we do that, let's take the base language for today, and then we go to the Ghana Stock Exchange to look at the performance of the equities on the market for today. Hello, welcome back. We go to the Ghana Stock Exchange to look at the equities performance for today. Abdul is here to do that.
Thank you so much, Edward. The session was lively today. There were 1.1 million shares traded, which translated into a value of 1.1 million Ghana cedis, and it's the biggest, the second highest since the third highest since the start of the week, because on Tuesday, the market recorded its biggest performance since the start of the week. If you want to know the volume of shares that were traded on the market today, 1.1 million, which translated into a value of 1.1 million Ghana cedis. The composite index recorded a decline today, and that has resulted in the market capitalization also recording some 60 million CD loss as a result of what transpired on the market. Before I tell you what the returns is like today, let me share with you how some of the equities performed as at the end of the session. Of course, the biggest activity was in MTN, traded 1 million, a little over 1 million shares, which translated into 1.1 million Ghana cedis. There was one single price move on the market, and that was Access Bank. Of course, since the start of the week, we've seen single price movers, but that has been in the positive. Today's price mover was in the negative. Access Bank shared 25 pesos, and this has been the biggest loss in this equity since it started activity on the Accra Bears, and that has resulted in the markets, in the return declining by 4.16 points. So if you have invested on the market since the start of the year, your return is hovering around negative 2.24%. The financial stocks also recorded some 7.55 points decline, and that has also resulted in its return further going in the negative, and it stands at negative 1.59%. So the market was lively, but as a result of the huge loss recorded in Access Bank, that has resulted in the market indices being in the red.
Wow. Thank you very much, Abdul. We go for a short break. When we come back, we're going to talk to the co-editor of the latest book that has been launched by the World Bank in the person of Dr. Albert Zufak, and we'll give you more. Hello, welcome back to Market Avenue. I have with me in the studio Dr. Albert Zufak, who is the Chief Economist for Africa Region, the World Bank, also co-editor of the latest book launched by the bank. You're welcome.
Thank you so much, Edward, for having me.
Great to have you.
Thank you.
The book is mainly looking at trade on the continent of Africa. What informed the decision by the bank to do this research and come up with this report?
Edward, there are three main reasons why we started this research. The first is that Africa has contributed less than 3% to global trade for more than 60 years. That number hasn't changed and has remained stubbornly low, below 3%. We contribute to global trade only 3% of the value of trade. We contribute only 3% of global export, and we contribute only 1% of global export of manufacturing. So we told ourselves there was something wrong going on here. And as you know, if you keep doing the same thing over and over and expect a different result, that could be defined as madness. So we thought there was something to really investigate and understand why this situation has remained this stubbornly so. So second reason, Edward, the world is changing and changing fast. But we also realized that as the world was changing, Africa trade policy wasn't. We were again stuck in the same old ways of dealing with trade policies. And how is the world changing? You have COVID-19, for example, that has come and completely disrupted all the value chains and changed the way trade policy is being done in other parts of the world. You have digitalization that is completely affecting the way the world produces, the world trades, and it is also influencing trade policy all over the world. You have longer term trends like value chains that have been dominating trade over the past 20 years. And you also have the recent boost in trade between Africa and Asia, with China and India becoming the first trading partner of Africa and the first FDI, foreign domestic investors in Africa. All these are signaling a big change in the global trade environment. And if you add to that, in the recent years, rising protectionism in the US, the trade tension between China and the US, and also protectionism in Europe in some markets, and the reflux of some production on the continent of Europe and even in Asia, we're speaking of reshoring. All this absolutely have prompted us to say, how does Africa react to this new changing environment? And the third reason is our trade policy, frankly, hasn't changed that much over time. So we thought Africa needs a new trade policy, a policy that really accounts for this big change, these big mega trends in the world.
The book highlighted improving physical integration such as cross-border energy and transport infrastructure and connectivity.
Yeah.
What exactly is that, and how can that help in facilitating trade on the continent?
Edward, one of the main findings of this book is that regional trade agreements or bilateral trade agreements or traditional trade agreements with our traditional partners haven't always delivered for the African youth. What do we mean by that? A trade agreement delivers when it leads to export diversification, when it leads to job creation. But our agreements, our trade agreements, haven't always functioned that way. To the contrary, most of our trade agreements allow us to integrate forward into global trade. Basically, we contribute to other people's export of high-value products, while we only contribute raw materials to that global trade. And that's why that number of 3% has remained so low, because it's not that we are not working hard, Edward. Africans are working extremely hard, exporting more and more cocoa, but cocoa beans that actually do not command
Value.
So it is the case that we need to implement different kind of policies to improve the supply capacity, supply of value-added products in Africa, if we are to really reap more gains from international trade. And that's where your question really hits the nail on the head, because for that to happen, we need to implement sound macroeconomic policy. Why? Because you cannot export high-value product with an overvaluated exchange rate. You cannot produce high-value product sustainably with high inflation. So the macro framework is critical. But you also need, Edward, to implement structural reforms that would improve your overall regulatory environment and allow private sector to move in, domestic or foreign, and create those jobs and produce those, chocolate tablets or chocolate powders that command more value than raw materials. You need to also invest in infrastructure, connective infrastructure, physical or digital, making sure that we link to markets in a more efficient way.
So in this direction, I'm talking about diversification.
Correct.
Looking at the continent itself, and with regard to the AFCT, what are some of the things that we need to do to be able to reap the needed benefit from these, trade area we've established?
So, before we get into the AFCTA, I think there is one important area of reform, which is for our countries in sub-Saharan Africa to rigorously reassess or assess existing trade agreements with the traditional partners, with traditional markets. Because in some cases, we are actually leaving a lot of money on the table. If you take AGOA, for example, with the US, the trade agreement with the US, it's quite clear from this book, from the analysis we have done, that a number of African countries were not able to fill their quota of transformed product, of value-added product. Instead, AGOA has become just a way to export more oil to the US. So in that case, it's not helping our economies to transform, and we need that economic transformation.
But oil too is good in a way.
Well, oil is good because it brings some forex, it brings some revenue, but it also brings volatility, right? The price of oil is extremely volatile, and it leads to the fact that our macroeconomic environment is extremely volatile. The moment oil prices drop, most of Africa's GDP drops.
Like it's happening now.
No. Currently, oil is actually
going up. We are suffering.
Right? Yeah, it's going up. Countries that are net importers of oil would suffer, but those who are net exporter would have a bounce, right? But that volatility, you don't find it in countries that have diversified their economy and diversified the export. So that's already something very, very important. That uncertainty that comes with exporting raw materials, that uncertainty is also coming with some trade agreement. For example, when AGOA is suspended in one country, it brings so much uncertainty, and the private sector cannot recover after that. Even if it's reinstated 6 months later or a year later, there is some sunk cost that has already been lost. So it is important to actually reassess those existing
trade agreements
to get more value for the African population. So that's one. Second direction the book is recommending is, yes, to look into new markets, and we are we're zooming on the East Asian market, right? The East Asian market, which is the fastest growing in the world, is the fastest growing middle class in the world, and it is a demand that will be more and more hungry for the kind of products that Africa can actually manufacture. And there are a number of niches that we identify in the book, so it's really good to read it. And the third thing is looking inward, looking into Africa, and we need to celebrate the fact that at a time where the whole world was erecting barriers, Africa has decided to actually embrace trade and launch the Africa Continental Free Trade Area. This is a huge step in the right direction. So looking in that direction, the book is recommending, Edward, that we really accelerate reform in that, in that space to reduce non-tariff barriers, to reduce all the, all the impediments to intra-Africa trade. And one way to do this is through regional value chains.
Let me, talking about AGOA, it's running through my mind. Why couldn't most African countries take advantage of this huge opportunity?
Well, the first reason is that we don't have the supply capacity to actually serve those markets, right? And that's why we're insisting on creating the right environment for an improved supply capacity, a manufacturing capacity, but also the capacity to manage the new economy. This is really important. So we didn't have that capacity. Second, there are still quite a lot of non-tariff barriers that make investment in some industries, especially those that were targeted by AGOA, like textile and garments, which actually have very thin margin, huge cost, huge non-tariff barriers would actually make them less competitive than they could be in other countries where infrastructure is better. So that's the second reason why we didn't. And the third reason is also that our economies have actually been ossified, I would say, have been, stuck in the old comparative advantage thinking that we can only export raw material and import everything else. But that concept is changing, and we need to really think of it in a dynamic way.
You highlighted the need that we need to have a tracking system, one-stop shops, and easing restrictions on services. How can that help in making sure that we enjoy, we increase trade, we scale up trade, perhaps between Africa and East Asia, as you're recommending?
Edward, let me give you an example. It's more expensive to bring a container from Amsterdam to Lagos than from Lagos to Maiduguri. Right?
Within the same Nigeria.
It's cheaper to bring it from Amsterdam to Lagos than to take it from Lagos to Maiduguri.
Wow.
That's an example of how logistics and infrastructure combined can make or break your desire to export at high level. Firms producing in those environments may not be competitive. So logistics is crucial. The way we manage our ports, our railways, our roads, and how many times those buses or those trucks stop on the road because of some control or some barriers for what you probably know better than I do. All those elements contribute to making our trade less effective, less competitive. So that's certainly one thing. But if I may come back to the issue of supply capacity, and I'll just give you one example. A couple of years ago, I was in China, and we were discussing these issues of market access. And the Chinese were actually quite open to importing some beef from an African country. And later on, I had a discussion with the Minister of Trade of that country, and he said, look, if this was to go ahead, now I'm worried because we can slaughter all our
because of the huge market.
And, in a month, and it wouldn't even be enough for China. So again, growing that supply capacity, it's going to be crucial. And more importantly, not a single country is going to be able to do it on its own. And that's why this regional integration, this framework of the Africa Continental Free Trade Area, and the thinking in terms of neighborhood instead of single countries could really be a game changer, right? If instead of thinking of just Ghana exporting cocoa butter, Ghana, Cote d'Ivoire, and maybe Togo pull together to make an industry that could actually export some of the parts. It's not sure. Chocolate is actually probably the most decisive way to add value. It could just be specializing in some portion of that value chain, that the portion that brings the highest value. But we cannot continue exporting cocoa beans
raw
and expect something different.
Wow. Now, talking about cocoa, Ghana and Cote d'Ivoire,
yes,
coming together to do that.
Yeah.
How can that be replicated in other parts of the world? And even that one, how can we get a needed support to be able to add value to cocoa? For instance, Ghana, we're doing about 40% at the moment, and we need to go higher than that.
Edward, I think the example of Cote d'Ivoire, Ghana, working together to capture a little bit more value on the chocolate value chain is a good one. It's a good example, and number of these must be emulated across Africa. In another book that my office has published last year, it was launched in November, on industrialization in Africa, we actually identify a number of regional value chains that can be implemented. Let me just give you a couple of examples. One, Togo exports phosphates, has been exporting phosphates for years, right?
Mm-hmm.
For not much. Yet the whole Africa spends billions importing fertilizers. Phosphate is key component in making fertilizer. Now, Nigeria, is on its way to creating a fertilizer company, a fertilizer industry. If they work together, Togo and Nigeria can now start together producing fertilizer for the African market, and why not exporting it to the rest of the world? Why not, right? Then you have the automotive industry, and this is important for Ghana. Ghana is attracting the automotive industry. But, an automobile is just a sum of parts. Some are rubber, some are, advanced plastics, some are, some are electronics, right? So, number of African countries can actually specialize in ECOWAS in just one part. You can have a country producing just wheels. You can have a country just producing, the
upholstery.
Exactly. So it's that thinking this book is bringing, and we believe it's timely because the Africa Continental Free Trade Area is actually setting the stage for that to happen.
Did the book talk about financing, how to attract the needed funds to be able to scale up production and maximize returns to that effect?
Edward, when you speak to business, people across the world, most of them cite financing as constraint. And it's the case that in our countries as well, access to finance, especially for the small and medium-sized firms, is an issue. But the way to look at the questions from our perspective is to say, when there are business opportunities that are profitable, generally the financing follows, because bankers like to make money. So working to improve the investment climate, improving infrastructure, improving the logistics would definitely make business ventures more competitive, more profitable, and that would certainly draw financing. But there is also a way to get our financial sector within countries to be a little bit more, forward or forthcoming in supporting domestic investment. Across Africa, we've clearly seen that it's not always the case. So, our domestic financial sector can do a little bit more into supporting private investment, domestic private investment.
And do they really have the capacity?
Well, that's a question for them, but I believe it's possible to do a little bit more than it's done now.
The international community, investment community, what did the book look at? What can be done? What maybe financing strategies or how to be able to raise the needed funds and how it can be utilized to attract more and then put in the right place? Because sometimes we attract the needed funds, but when it comes to managing them to be able to scale up SMEs and all those things, we have a bit of difficulty in that regard.
So, Edward, I think it is crucial for us in Africa not to always look elsewhere
outside
when it comes to financing or most of the problems. I like to say, foreigners have never developed a country. They have helped developing countries that were ready and that were, moving in that direction. So it is important that we start really looking into what kind of resources can be mobilized domestically. It's not just FDI that would be the solution. When we speak of SMEs, small and medium-sized enterprises, they will be and they are majoritarily domestically owned. So we need to think of financing solutions within Africa. We need to also count on crowding in funding from abroad. But the best way is to actually bring both to work together. So international institutions like the International Finance Corporation in the World Bank Group definitely work with the private sector in countries to see how to take those business opportunities to fruition and to scale.
Thank you very much, Dr. Albert Zufak.
Thank you so much, Edward.
Chief Economist for Africa, World Bank.
Thank you.
For your time in the studio. We've been looking at a book that has been launched by the World Bank that focuses on how Africa can take advantage of the various trade agreement. He mentioned AGOA and even the AFCT. What can be done to make sure that we take advantage of this agreement and even export more to the East Asian countries to rake in more foreign exchange? This is how we draw the curtain on Market Avenue today. My name is Edward Nyakun. God willing, we come here tomorrow. Shalom.